Hello, traders. It's 8:02 a.m. Chicago time on Thursday, the 11th of June, 2020. This is episode number 1774. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Well, the markets are in corrective mode. One of the key things I want to impress upon you today is that we have rollover going on today. Officially, um, the exchange has rolled to September contracts in the US indices. So the ES is now trading under ESU 0, ESU 20. And that's what I'll be quoting today simply because, well, it's the official roll, but also because um, my charts, my data feed rolls with the exchange. So just keep that in mind as we're talking today. The premium differential for September versus June is negative 10.5 points. So as you're looking at my charts, you need to add 10.5 points to the prices shown in order to match them with your chart if your chart is remaining in June for now. There's always a debate every quarter when to roll. Why did you roll? The volume is still more heavier in the June versus September, yada, 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 yada. It doesn't matter. Do what you like. But the liquidity is not the issue here. The fact is I have to roll. And there's a disturbance. There's a disturbance to trading anyway as a result because the delta gets affected, volume gets affected because there are many who will execute opposing trades in the June versus September to roll their position or to exit one and enter another. And so from now until the roll is pretty much done, we have to take delta. You take delta with a grain of salt. And so I roll with the official, which happens right after settlement on the Wednesday for the Thursday session. Technically, the Thursday session, from Thursday onwards, the Thursday session starts Wednesday at 5 p.m. Chicago time, 6 p.m. Eastern, and everything just rolls over. Okay. Not the greatest time. I'm going to tell you that the rollover, roll week, and quad witching have traditionally been, for my entire career, traditionally been weeks where uh, it was better to be much more picky and cautious than to come in guns blazing. And I would suggest the same to everybody here. So anyway, so that's the big announcement today. Just remember, rollover starts today, and I'm quoting U20 or U0, the September contract in the indices. This morning, crude oil is the laggard. Crude taking a big hit, down 6.74%. July crude is trading at 36.90, down $2.75 or 70 cents on pretty good volume. The Russell follows. The Russell's down 64 points or 4.38%, almost limit down on the Globex session. Europe seeing more of the same. The Euro stocks are down 116 points or 3.5%. The Dow's off 3.5%, 921 points, and the DAX is off 3.35% or 421 points. The S&P is down 83 points or 2.61%. I've been saying points instead of percent. The Nasdaq's off 155 points or 1.54%. So allocation is to safety. We have a small pop in gold. Gold is up 1.26%, trading at 1742.40 in the August contract, up $21.70, 1.26%. The bonds are up over a handle and a half. The bonds are up a handle and 24 ticks. The Bund is up 1.12 points or 0.64% and so on. So clearly allocation is to safety today. So keep that in mind. Now I've talked throughout the week about we had that neutral extreme up day with a fall. and the fact that we had lower highs, and I was looking for a rotation as a primary scenario 2 days ago. I was looking for a rotation at least into the gap mid below 31.47, I think, in the old contract, so 31 36 and a half in the new, and currently the S&P is trading at 30.92, has already crossed through the gap without trading it in the day session, so the gap remains open, and that's what we're heading into, some selling, expecting volatility to pick up, expecting volume to pick up, not only for the roll, which it traditionally does, but I expect it to pick up as stops get triggered and folks have to interact with the market. So that's where we stand. Let me pull up my display. My watch list, which I forgot to set up, that shows me the difference between the two contracts. So in terms of what was released overnight, a lot of lower tier releases, but the one of the key ones that came out is the U.S. Initial jobless claims came in at 1.542 million initial claims versus a forecast of 1.5. It's pretty much in line. PPI month on month came in at 0.4, higher than the zero expected. Core PPI at negative 0.1, slightly better than the negative 0.2 expected month on month. Continuing claims higher than what was expected, 20.929 million versus 19.89 million expected. It is Thursday, so we should have pretty much unrestricted movement. I don't see very much on the calendar for today. We have gasoline, natural gas inventories. We have a 4-week bill, 8-week bill, the NASDE report, the crop report at noon Eastern, 30-year bond auction at 1. And this evening, we get industrial production and cap utilization from Japan. So not much on the calendar to hold us back here as far as I'm concerned. I'm going to, even though I do have the image from yesterday lined up, I'm going to skip the review segment. Yesterday, I was looking for the market to drop to drop from the open, expected to open at 32.11 in the June contract. Well, let me just go over it real quick in our review segment just for consistency. Expected it to drop, and then I was looking for it to push above that 32.21, and then we'd have FOMC, and I was looking for it to shoot up on FOMC most likely, but as I said, it's anyone's guess what it'll do. Now, given the action, here's yesterday's action. There are a lot of rotations here. Let's clean up. What we ended up doing is we pushed up real quick. But really we held a trend down, a nice channel down, and broke the IB low to form what could be described as an inverted head and shoulder back into the mid. And then we, at the FOMC, which came out over here at the 31, what was it, 31.97 even in the May contract. So 31.86 half in the the June contract versus the September, and it's just all bets are off from there. It's just all over. It's all over the place. What we did do is we pushed neutral. We pushed the prior high by a tick. We have a 1 tick failed auction, and it dropped off. And what we have is a neutral day that is a neutral normal, not neutral extreme, and a fairly balanced profile. Despite the whipping around yesterday, the value area is valid, but the overnight session could not muster up any buyers. the overnight high was very, very close to the prior close. We ended up closing just below the weekly close yesterday, and we immediately dropped lower. So yesterday, what we do know is the market traded on both sides of the IB, very active price discovery. We do know that it was a neutral day. We do know that the value area is valid, but we also know that this morning we have a huge gap, so none of that really matters. It's not really all that important. Here's the overnight session again. This is on the September contract. The overnight session shows that it opened, poked up a little bit, and went below the prior low, pulled back to the prior low to the tick here before it started running down. There was a lot that traded on the open. But again, do not pay attention to volume right now. We're going to have to live without having the input of volume for at least the next 3 sessions or so. Generally, the roll is done by Wednesday. 90% of it's done by Wednesday. We can resume our normal way of doing business. But the overnight session, very prongy, very, very prongy profile. This is partly for roll, but really it's a market that is not able to hold prices very well. We were trading up here for a while when I came in this morning at about 6 a.m. Chicago time, and it's just continuing to drop, and I'm expecting it to continue to do so. So that's where we stand. Now, I can sit here and show you what Bookmap looks like, right? But I'm gonna confuse you a little bit because I'm gonna show the June contract as most of the volume is still there because in order flow, volume is very important. So I'm going to go off of the June contract. Remember, the difference between the June and the September contracts is negative 10.5 points. So the September contract would be trading from here, whatever the price is here, minus 10.5 points. And so when we look at the liquidity areas, it held the 3110. It held the 3110 on a collision pullback. This is a small scalp setup to 3100. 3100, of course, has this liquidity, and we are kind of fighting at it. We're an entire 100 handles below where we were just a day ago. So this is a fairly substantial sell-off here. The market's just unable to find any traction and is clearly overextended as we would expect. So from the open, you can see that we made this little attempt higher. Come on now. Let's see. Okay. From the open, we see that it made a little push higher, and then from there, it's really just sellers in control. You have liquidity areas that cause collisions that are retested, liquidity area causing a collision that's retested, and so on and so forth. And that just goes on and on and on. There's some thick liquidity areas that we push through, and we continue to push through. There's just no traction this morning whatsoever. Overnight inventory short. And we're opening up with in a market that is in a very distinct selling mode. As I crunch down the full depth here, this is using market by order feed by Rhythmic, which is my execution feed. Basically the best feed out there in my opinion, but 3075 is the last frontier here for today before the liquidity tapers off quite rapidly. It's quite amazing, but we're not too far from there. I mean, we're a couple hundred, we're 25 points away from there, and we're 100 points below. And it's moved quite a ways. So from a liquidity standpoint for today, the market is really pushing, is really trading on the bid side offering liquidity on the bid side, which tells me that it's likely to bounce up and continue lower on the reopen. Okay, so there's a lot to cover here, and I'm not going to cover it because it would make for a very, very long trader bite. Here's the composite real quick. Because we have rollover, I like to show the composite so folks have a chance to compare their data against mine. What you want to pay attention to here are the peaks and bottoms, and make sure that your charts, whatever those charts are, whoever um, your data feed is, to make sure that you've got the same kind of numbers. Here it is. So the all-time high using the September contract is now 33.72 even, 33.72 even. The interim low that we put in March is now 21.69, 21.69. Okay, and we are trading right in here. So if I zoom in here for a little bit, just to show you, I want to actually zoom out just to show you what the big picture is. Let's get rid of these lines here for a minute. This is the big picture, big picture composite. And each bar here represents a day session, an RTH session. And you can see how we've trended quite strong to the all-time high. And we had this massive correction down. Actually, let me get rid of this. It's not needed anymore. So you can see how we dropped. We're well above the 200 SMA. We're well above the 50 SMA, the 20 SMA. And what we did is we have consolidated up here for a few days. We had a pretty good gap underneath us. And then we are in this two-day balance that we put in about a week ago or a week and a half ago. And we have another gap beneath us. And I talked about this the other day, that we are leaving a lot of weak structures behind. But as we move lower, we start to move into this very high volume node, this very high volume zone with a point of control of 2908, 2908. So as we start to move lower, that 2908, 2912 area becomes really big. That would be the magnet. So as the price moves over, we have this kind of a Star Trek tractor beam, like a gravitational pull, like a Jupiter, pulling prices towards equilibrium, the long-term equilibrium point for this entire segment, dating way back. And so the extended target on the short side would be 2908, but there's a lot that can get in the way here. The reason I'm going as far down as 2908 is because the structures we have created on the way up are quite weak. Why am I saying they're quite weak? Is because they were very scantily auctioned. They were not fully auctioned. We tended to just ram through based on the FOMC action, based on the liquidity that's being provided to the market. And so we have rushed through all this stuff. So here we are. Here's where we've been since last Friday. We've been in this balance through yesterday, right? So the balance, we had a nice point of control up here. We've been in this balance for some time, and now we are down here. So we're moving from up here to down here while skipping this entire gap zone. So again, even though we're selling off, we're leaving again a poor or untraded gap. And the market doesn't like to do that. It doesn't like to leave these areas untested. We don't know what kind of participation we would have. And that's why gaps create poor structures. So once we get down in here, we're in this kind of balance right here, which, we're right on top of. Look at that high volume node. What you see on the right here is what's called a composite profile, and that is the volume at each price, the actual tick volume or 1 minute volume at each price. And you can see that we created this 2-day island right here of balance. and that balance coincides with the composite. When I throw a volume profile in here, you can see that it coincides with the composite point of control in the September contract at 30.9950, and we're trading at 31.0150. So the market is back in a big magnetized area here, an attractive area, and it's holding steady. Underneath there's a gap again right underneath here. There's a gap again, and you can see there's a low volume node there. So we're leaving this low volume area above, and we have moved from a high volume node to a high volume node, and we did it overnight. What does that do? It creates creates disequilibrium. I'm looking this morning, for it to be quite active and quite pushy. There's a huge incentive for buyers to step in here at lower prices, as the overall conditions have not changed, despite the fact that the FOMC made some remarks about holding off on interest rate increases 2022 and so on. The market is still coming off today, and there's some clear liquidation across multiple asset classes and a move towards safety. And so as we trade this, you're going to have to watch very closely last Thursday. Last Thursday is going to be the determinant, the range of last Thursday. So 31.16 and a quarter to 30.77. So 116 to 77 to 77. This is the area to watch. We want to see, does it break through? If it breaks through, then we are likely to drop into that 30.75, 30.50 area. If it breaks through to the upside, then we're looking at 31.70 and then back into the prior balance, with 31.90 being the long-term target. I'm not going to do any scenarios this morning. Today is really a scalping day. And I just don't want to waste your time with some imaginary scenarios. There's some macroeconomic or fundamental pieces that are coming together here that are shaping the decisions that are likely to come across various trade desks today in the form of orders from trade managers and fund managers. And so I'm not going to sit here and try to create scenarios. The natural thing for the market to do is to gyrate around a high volume node. Those of you who saw the webinar series I did in 2010 or 2009 for my charity a long time ago, remember that a high volume node is an acceptance area, and it's likely to cause price to be stuck there. But the moves out of balance are very strong, and those create the greatest opportunities when the market is gyrating within a high volume node and imbalance. We're looking for extremes, and those extremes are 16 and 77 for today. Pretty wide, but today expect a wider range, more volume, and expect participation, some pretty good price discovery this morning. So it might start off very, very quiet, but the move out of here could be quite big because we have a gap above and a gap below, and there's an incentive from both sides to participate. So I'll leave you with that. Key thing I want to remind you of this afternoon, I'm being hosted by Futures.io for an AMA. Would love for you to attend, register to attend. I have not done public AMAs in a while since I launched Convergent. The link for this is not something you have to quickly write down. You can find it in the YouTube video description. You can find it in the YouTube live chat, and it'll be posted on my Twitter feed as well. I hope you'll register and attend. Convergent members, just remember we have a study hall today at 1 Eastern. It's going to be a very busy day for me. But so it's a rollover today, and I posted the rollover numbers. These are them. I posted those on our Twitter feed. Convergent members, you have that in your in the Head Trader channel. Very important to understand how this works if you're trading futures. And then, of course, the AMA this afternoon. I know there's a lot going on. We had Small Exchange hosted on Tuesday, and it's just been a pretty crazy week. Just grateful to be busy and grateful to have you as a part of the community that I'm in. Thanks for tuning in, and just watch yourself today. It could go hard either way. Be cautious. Take care.